Hello everybody, welcome to the market wrap-up brought to you by forexlivetoday.com. Come and join us on the website. All the latest news, everything you need to know regarding fundamentals, lots of analysis, lots of tools to help you with your trading. But let's get on to the charts. And the first thing we obviously need to talk about today is the big risk event that we had on Friday. We started out with GDP coming out of the US. It was a small miss, not a great figure, just 1%, but with the market expecting only 1.1%, not much effect to the general markets. The big risk event yesterday was the speech by Bernanke coming out of the symposium in Jackson Hole. Now, the reason the market was looking forward to this with such anticipation was that this was the forum that he used last year to announce QE2. Now, he doesn't say QE2 and QE3. No, he uses other terms. But what we listen for in these speeches is an indication that they will be providing further stimulus. They will be increasing their balance sheet. They will be a buyer in the market. That's what we are looking out for. Now, regarding his speech yesterday, he gave no indication that there would be immediate stimulus. However, he told us that the September Fed meeting will be increased from 1 to 2 days, and he also mentioned that there was still a range of tools available to the Fed to, assist in the economic recovery. Now, this is all ambiguous enough that it's given us no real information whatsoever. So I would have loved to hear some sort of clarity, some sort of policy, but I guess it's not the correct forum for it. It's just that he used this time last year to make an important announcement. That's why perhaps the market was expecting something more. But basically all he's done is kick the can down the road until September, but he did give an indication that there may be something in the September FOMC meeting that will give us some more clarity. Now, Jean-Claude Trichet, who is the president of the ECB, he will be making his speech today, and I guess we can expect more of the same. So let's look at how this translated into the markets. Here we have the S&P 500 index, and as you can see, Friday we just continued within the tight range of consolidation that we have been in for 3 weeks now, ever since the initial bearish move to the downside. So the market also unsure as to, will there be further stimulus? What's the situation? No one knows. So this is why you get this consolidation, no direction, just general chop up and down. If we go across to the UK and look at the FTSE 100, you can see exactly the same picture, just up, down, general chop. Now, for a medium-term trader, this is very difficult conditions to trade. For short-term traders, for scalpers, they quite like the volatility, because they're in and out of their trades so quickly. But for a swing trader, it's not the ideal conditions because there's no real trend. Okay, let's move over to the euro. Now, as we can see, on Friday, this last candle here was a very bullish day for the euro. In actual fact, the close, as you can see, was the highest close we've had in quite some time, going back to July. So this, on a technical level, would be considered a very bullish close. We are just below, quite a significant resistance point. However, the fact that it was the highest close in, more than a month is quite bullish. Now, that's on a technical level. If you've been noticing or reading the website towards the end of last week, specifically on Friday, you will notice that Greece is back in the headlines. The time has come to check whether Greece has been meeting their targets to allow for the further tranche, the next bundle of money basically that they will be given. Now the word is that they are not meeting those targets, and I think you will see Greece and the European sovereign debt crisis coming back into the headlines again next week. Therefore, this bullish move or this bullish close that we have here on the euro on a technical level may be negated next week by fundamental news coming out, rather the regards the sovereign debt crisis. So if there's some sort of more hawkish statements regarding Greece, in actual fact they are doing better than expected and things are going well, then we could see a break to the upside here, and then we will be looking at these further resistance points as possible targets. However, in my opinion, the more likely scenario will be perhaps a break of this resistance but not a close, and then a move further down. However, because we have opposing signals on the technical and the fundamental, I will not be taking initial positions on this until it becomes clearer. Now moving across to dollar Swiss, starting to get very interesting. The Swiss franc actually across all of its pairs, we have had a break of this very long-term downtrend. I mean, I've got back to February this year, but if we go back years and years, or sorry, a couple of years, then you can see the downtrend has been quite significant. So this intervention from the Swiss franc and now further weakening of the Swiss franc to a break here could be significant. If we see some follow through to the upside, there is a long way to go in this reversal. However, open positions for large traders are still heavily long the Swiss franc. So even though the Swiss National Bank is doing its very best to weaken this currency, market participants are still holding the view that, especially with the euro in such trouble, the Swiss franc is the alternative, is the safe haven, is the alternative to the euro. So interesting to watch. If we get further upside here and continuing closes above this level, then perhaps we're seeing the beginnings of a significant reversal. If, however, early next week we see further Swiss strength, weakness perhaps in the equity markets, weakness perhaps for the euro, and this closing back down into this channel, I think the more likely scenario will be further weakness for dollar Swiss, further strength for the Swiss franc. Okay, moving across to the cable, pound dollar. We can see over the course of this year it's basically been going sideways. Quite a big range though. So if we take the top of the range at 167.50 approximately, and let's take the bottom of the range around here at 157. So that's 1,000 pips there to play with in this range. Now from this previous range low, you can see a succession of higher highs, high, and higher lows. So the low, and then a higher low, and then a higher low once again. So this could be the beginnings of, a test to the top of this range, and then a possible breakout to the upside. Even though the pound is in, and the British economy is in a similar position to perhaps the US in regards to very slow recovery, very slow growth. The British government took austerity measures more than 12 months ago now, so they are taking steps to actually reduce the deficit and to reduce government spending, which perhaps the US governments and the US policymakers are not doing. So I actually like this to the upside. I do like this trend that is beginning to form here. The first target I would look for would be a test of this range high here. Alright, dollar yen. Now, interesting, previously that we spoke about the Swiss franc. The yen and the Swiss franc have been obviously very strong over recent times, due to the fact that the US dollar has been unloved. The US dollar has been subject to devaluation due to the Fed policy of printing more money. So the Swiss franc and the Japanese yen have been exceptionally strong. So recently, the Swiss National Bank and the Bank of Japan, the finance ministries of Japan, have stepped in to weaken their currencies. Now, as you can see with Japan, they have not been quite as successful as the Swiss. So they have had some spikes, but they are back down where they started. Now I have this range, this tsunami low. You can see it's strong support, and this is the region where the Bank of Japan or the finance ministry tends to take action. So long the yen down here, I think you are playing with a lot of you're leaving yourself open to intervention, the threat of intervention there. I think a safer position would be small positions long from this base low here, anywhere from maybe about 76.40, say. Long positions from the bottom of this range. You have the support there to trade from, and you also have the backing of what the Bank of Japan wants. So that's another thing to look at. Now, dollar CAD. I put a trade set up onto the website this week regarding dollar CAD, but I was mentioning how I wanted to wait until after Jackson Hole, after we had some clarification. Of course, we didn't really get that clarification, so not as interested as I was, because as you can see on Friday we had strong moves in both directions. It did move up to test the top of the range and then immediately moved back down. So dollar CAD will need some sort of fundamental driver, or perhaps a risk aversion move, which will get it moving to the upside, a risk appetite move, which will get it moving to the downside. There is still this range to play with, but yeah, we are lacking that clarification that I was hoping for from Bernanke. And one last pair that I would like to look at, and that is Euro Pound. Now I've given us over a year of range here, just to show you this huge ascending wedge that we have here. It's a true wedge. We have our 3 points, or actually 4 points of support there, and our 3 points of resistance at the top. But then, because it's so big, within the wedge we have further support level here. We have our head and shoulders here. So it's not one that I'm looking to trade immediately. We are at a range high once again here. There could be a trade to the downside, but it is one that I am keeping an eye on. It seems to be on a technical level, and I do lean towards technicals for my trades with fundamental support. From a technical level, I really like the way that this pair is behaving. So no immediate trade, but something to keep an eye on. So after coming back from holidays and basically not really participating in the markets this week, I do hope to be back full throttle early next week with some positions. So good luck out there, guys. Remember, keep an eye on the website, all the latest news. Look for some headlines regarding Greece early next week. Could be affecting the euro, and catch up on Bernanke's speech. There's a link on the website that will give you the whole speech if you're interested in that. Alright, see you next weekend, and bye for now.